day. Today we are going to look at the debtors collection period. So we are told make use of the information provided below to draw up a debtors collection period for the 3 months, uh, 1 January to 31 March. Okay, and then you are given the information, and then they are saying that debtors usually settle their accounts as follows: 60% of debtors pay 1 month after the date of sale, and then 20% pay 2 months after the date of sales. Okay, now let's start here with November. Okay, let's say that November right now is a month of sale, right? November is a month of sale. So it means that, so they said that 60% of debtors pay 1 month after the date of sale. That will mean that 60% of what was sold in November will be paid in December, right? 60%. And then 20% of debtors pay 2 months after the date of sale. So that will mean that 20% will be paid in January, right? And then 15% of the debtors pay 3 months after the date of sale. So 3 months after the date of sale, which is November, that is going to be February. So 15% is going to be paid in February, right? Okay. Now, we are told that cash sales is 40% of the total sales. Now, we need to remember this. When you are doing a debtors collection schedule, we must use the amounts of the credit sales. Okay, we must use the amounts of the credit sales. So here, these are the amounts of the sales. So we need to find the credit sales, because these sales amount, they are including both the cash sales and the credit sales. So we need to remember that for the sales, we have two sales. We have the cash sales and the credit sales. So in a debtors collection, we use the credit sales. So now for November, the sales, they are 60,000. So multiply by, so they are saying that cash sales, they are 40%. So because we want the credit sales, it means that the credit sales, they are 60%. How much is that? 60,000 times 60%, it is going to be 36,000. So this means that for November, the credit sales, they are 36,000. Now, let's go there. So in the answer sheet, it's already done for January, 20%, right? But then, according to this, 15% will be paid in February. Okay, 15% will be paid in February of the credit sales. So times 15%. So this is for February, right? Remember, we are doing this for January, February, and March. So these months were December and January, they are not included here. They are not included in this period. So this is why we are not doing the calculations here. Okay, 36,000 multiplied by 15%, that is 5,400. Okay, 5,400. Sorry, we are in February. 5,400. Right? Now we move to December. Okay. Now let me erase this. Now let's say okay. So now let's say that now December is now the month of sale. Okay, December is now the month of sale. After December, we have we have January, and then it's February, and then it's March. Right? Now, we are told that 60% of debtors pay one one month after the date of sale. So right now we are saying that December is the date of sale, right? So 60% will be paid after December, which is going to be January, right? And then 20% 2 months after the date of sale. The date of sale it's December. So after 2 months, this is going to be February. So 20% is going to be paid in February, right? 15% of debtors pay 3 months after the date of sale. 3 months after December, that is March. Right now, we are given the sales for December, they are 80,000. So we're going to say 80,000 because we want to find the credit sales. 80,000 times 60% because we are told that 40% they are cash sales. So 80,000 multiplied by 60%, it is going to be 48,000. Okay, so the credit sales for December, they are 48,000. Right now, 60% is going to be paid in January here, right? 60% is going to be paid in January. So 48,000 multiplied by 60%, it is going to be 28,800, right? And then 20% will be paid in February. So 20% is going to be paid in February. So 48,000 multiplied by 20%, that is 9,600. 9,600. And then 15% will be paid in March. According to this, it's going to be paid in March. So 48,000 multiplied by 15%, it is going to be 7,200, right? So this one is saying at 5% of irrecoverable bad debts. So this one is a bad debt. It's not affecting the debtors collection schedule. Okay. Now the next one. Now we are in January. So let's say this January is our month of sale. Let's say this January is our month of sale. So if January is our month of sale, it means that 60% is going to be paid 1 month after the date of sale. So after the date of sale, it is going to be February. And then after February, it's what? It's March. Right? So right now, January is a month of sale. 60% of debtors pay 1 month after the date of sale. So 1 month after January is what? It's February. 60% will be paid here, right? And then 20% 2 months after the date of sale. So 2 months after January is what? It's March. So 20% is going to be paid here in March. So how much is the sales for January? They are 50,000. So we want the credit sales. So times 60%, 50,000 times 60%, it is going to be 30,000. So the credit sales for January, they are 30,000. January. The credit sales, they are 30,000. And then 60% is going to be paid when? It's going to be paid in February. Okay, 30,000 multiplied by 60%, that is going to be 18,000, right? And then 20% is going to be paid in March. 20% is going to be paid in March. So 30,000 multiplied by 20% is going to be 6,000, right? Now we are moving to February, right? Now, so now February is a month of sale. So if February is a month of sale, it means that 60% is going to be paid when? In March, right? And then 20% is going to be paid in April. So we are not doing for April, we are doing for January, February, and March. So there's no need to include April because we are not doing for April. Okay, so 60% is going to be paid in March, right? So how much are their sales for February? They are 52,000. Multiplied by 60% of the credit sales is equal to, multiplied by 60% is equal to 31,200. So the credit sales for February, credit sales for February, 31,200. So we are told that 60% is going to be paid in March. So times 60%, it's going to be 18,720. 18,720, right? Now, if you can look at this, the ones for March, they are going to be paid from April. So we are not doing for April. So therefore, there's no need to do it. Okay, let's do the calculations. Let's do the calculations. 18,720 plus 6,000 plus 7.2, 31,920. 31,920, then 5.4 plus 9,600 plus 18. Okay, 5.4 plus 9,600 plus 18,000, 33,000, and then 7.2 plus 28,800, 36,000. So this is going to the cash budget as a collection from debtors, or the receipt from the debtors. So this is going to the cash budget, these amounts. Okay,